Alright, so today I wanted to do a stock analysis on AMD and Advanced Micro Devices. Now I'm sure pretty well everyone knows who they are. Again, semiconductor company, large cap, $236 billion market cap. So again, for sure large cap. Again, the first thing that I notice here, earnings yield of 0.56%, which is concerningly low, which we'll get into a little bit more later. They are virtually at the 52-week high, almost right on there. 52-week high is, again, they're literally right on it at the time of me making this video. Again, over the last year, they are up very, very nice. I mean, they're up over 100%. 3-year, they're up by a little bit. Even 5-year, they're actually up a ton. I mean, just out of curiosity, what are they up on the last 5 years? 600%, right? So again, just insane returns from this company if you've bought it, last year or 3 years ago or 5 years ago, right? But again, in my opinion, this company, again, they have some issues, right? They certainly have some issues, at least right now. Now, I mean, the first one here is, again, financial health is decent, right? Financial health is decent, but the profitability and the growth numbers are slipping, right? They are both slipping, which is definitely concerning, especially considering that this company relies on being able to grow very quickly to justify their valuation, right? So that's something that's certainly very concerning. Again, stock-based compensation is extremely concerning here as well. I mean, return on equity is basically zero right now. Return on invested capital is basically zero right now, which is also concerning. And again, the valuations right now is just out of control, right? I mean, 179 price to free cash flow. I mean, 11 price to sales, 1100 PE, right? So I would have to say that, honestly, if I got a chance to buy this company at a 50% discount, I still wouldn't even do it, right? I still wouldn't even do it. Like, if based on the valuations here, it would probably have to be around $50 for me to buy this company, right? Again, just from a bird's eye view, which I'll get into a little bit more here sooner. So again, as far as the balance sheet goes, like I say, their balance sheet's actually very good, right? So again, long term they should be okay because they have a very good balance sheet. But again, you want to be very concerned about the valuations here because that's something that's extremely concerning. If you look at the metrics here, again, they're not even that profitable of a company, right? I mean, the highest their operating cash flow margin has ever been is 21%, free cash flow margin 19%. Like, those are good numbers, but that's the highest it's ever been, right? I mean, 2022 it came down, 2023 I'm guessing it came down as well. So again, that's something that's certainly very concerning. If you look at return on invested capital, again, it's been good over the last 4 years, but recently it's been very, very poor, right? Very, very poor. So that's something to be very concerned about if you ask me. If we get into the other metrics here, again, free cash flow, again, has stagnated, even though it grew very, very well. I mean, they literally like 4x their free cash flow between 2020 and 2021, which is very good. But again, the fact that it's stagnated for 3 years is certainly concerning. Now, again, you also have to keep in mind that the chip business is fairly cyclical. So again, periods like this will happen, but in my opinion, they shouldn't be coming down this much, right? At least in my opinion. Now, if we look at the stock count here, again, they were issuing shares every single year up until 2021 when they bought back shares. 2022 they bought back shares. So that's good news. They're starting to buy back shares. But again, they took on debt. Like, why are they taking on debt? That's something that's concerning as well. Again, the last thing they don't pay a dividend, so we won't get into that. The last thing we'll get into here is the freeform, just to see historical valuations and whatnot, how well they're growing. So again, go back to 2014. Again, the average price to operating cash flow has been 151. The latest is 137. Now, you got to keep in mind, too, that that's still crazy expensive. Like, that's crazy expensive. So again, I would not view that as a discount by any means. If we go back 5 years, they've actually grew their operating cash flow 112%, which is phenomenal. Like, that's phenomenal. But again, the valuation is still just out of this world, right? It's out of this world crazy. I mean, let's just go back 3 years, just out of curiosity here. Again, the operating cash flow and the free cash flow have both gone down, right? So again, as far as growth to the company over the last 3 years, they're down when it comes to free cash flow and operating cash flow. So why are people paying the valuation that they're paying, right? This is why I'm saying that even if I got this company at a 50% discount, I still don't think I would buy it. That's when I would consider it, but that's how much it would have to come down for me to consider it. So anyway, this is AMD, my thoughts on AMD. If you liked the video, please comment, like, subscribe, and stay tuned for more.